Hey everybody, Courtney Smith here with our Wall Street winners for May 25th. Don't forget, Memorial Day is Monday, so the markets will be closed in the U.S. and will reopen on Tuesday. Now, we got the little picture of the bear there because I'm starting to get a little bit more bearish. I have a big webinar coming up Thursday at 5 p.m. Pacific time, 8 p.m. Eastern time, all about the bear market. So if you get an email about that, please sign up. I'll be going over my thesis on what's going on, or what's going to go on in the market, I should say. So please come to the webinar. Okay, one of the concerns is right here. We're making higher highs on the stock price, just barely, struggling to make higher highs. But the RSI, which is that green line, shows the momentum of the market is getting weaker and weaker. So usually momentum leads price. And as a result, this weak momentum is probably going to lead to a move down in the market. Now, the question that I'm going to be answering on Thursday evening is it just a little blip on the downside? Or is it another minimum 20% decline? Now, notice that the volume continues to contract in the market as the market rallies. That means that volume is not confirming the bull market. So, makes me very nervous. I'll teach you on Thursday night how nervous I am. Okay, over on the Dow Jones, we actually made a higher high than the high we made a week or so before that, but we haven't made a new high in about 3 weeks in the Dow. Not impressive. What is impressive is the NASDAQ. The NASDAQ is really moving sharply higher. It's a clear bull market. Purple predictor is bullish. But even here, if you look closely, look at the little green line. Little green line didn't make a new high when the stock price made a new high. That's called a momentum divergence or an RSI divergence, and it usually means at least a several-day decline. So look for all 3 of our major indices to decline this week. Once again, is it the beginning of a bear market or just a normal correction? Come on Thursday. A seasonality for the stock market is a little on the bullish side. I'm sorry, it's neutral during this period of time. So we look to the utilities to see if they're acting better. Utilities are bullish from May 1st. And as you can see, the purple predictor is negative, and they're clearly in a bear market. So we're not going to get into the Utes either. Okay, S&P, we're kind of at a low here. And what normal seasonality should be is that the market will start to rally. Really, it's not going to rally until June. It's really, you look at the green line, it's kind of sideways right now. But maybe in June, it'll start to rally. That's what it's saying. Now, just a second, let me go back. But notice the other 2 lines show the blue line, which is all election years, shows a dip in September, October. Not a big dip, but, a dip. But look at the red line. If there was an open field, and we don't have an open field, we presume that Trump will be nominated by the Republicans. But if it was an open field, then you can see there'd be a significant move down starting at the beginning of September. So keep that in mind when you're thinking bear markets. Okay, the yield curve still remains negative in my mind because a year ago, we were coming back down into the, look at May there of last year. You can see we had been slightly above the 0 line, and then we went down below the 0 line effectively for 5 months. That's a lot, okay? That's pretty darn bearish. Asset allocation, slightly bullish. A little bit of money's coming out of the bond market and into the stock market. But notice the RISKDICATOR. So you saw, this is why the NASDAQ is gaining, because people are piling into riskier stocks like the NASDAQ, and they don't want the boring S&P or Dow stocks. When I'm going through, for fully paid up members, I have actual trades that I put on my own account, of course. And my watch list is dominated by technology companies. Well, technology companies and gold companies, okay? But technology, medical technology, high technology, big data, whatever it is, technology is really high on my watch list, and also gold mining companies. So the market's looking for more risk in the face of the COVID crisis. I'm scratching my head. Really just kind of following, it was boring. All right, bonds also quite boring, but notice that the purple predictor is making higher highs and higher lows. Now, the interesting thing to me is we saw on our risk indicator that they were looking for more risk, but here it looks like the smart money is going for less risk, and they're going back into the bond market. So let's put some of these indicators together. We saw that money was going out of the bond market, but the smart money's buying bonds, which means that it's the dumb money that's going out of bonds and into stocks. You got it? Dumb money is going out of bonds and into stocks, but smart money is buying bonds. These are the insights you only get in Wall Street Winners. Bond key factor is really same as last week, so I won't repeat. Dollar. Okay. Now gold, a little bit more interesting. So we had this big pennant formation. Hard to say if it's a legit pennant formation because the volume wasn't going down while it was occurring. But we broke out, and then the market has done what's called a pullback. Now the pullback, if you extended this top blue line down, you can see that Thursday's low hit where the blue line would be. That's called a pullback. It's very normal in a pennant formation. And now what's supposed to happen, if it's a legit pennant formation, is we start another bull leg up. And we go all the way up into close to 1,900 an ounce. I'm still not sure that this is really a legit formation, but I thought I'd tell you what the expectations would be if it was a legit pennant. Okay, we got a little bounce in our top indicator, so it's kind of bullish neutral. The middle indicator is moving higher, so I would actually count that as bullish, but the bottom one is kind of going down. So our gold indicators are kind of a mixed bag. Fully paid up members, of course, have an even better indicator. Crude oil got up a little bit higher than I expected. I would say I just can't see it going too much higher. Technically, that big gap in early March would be very, very difficult to surmount that. So look for this rally to run out of gas right about now. Bitcoin, as I say, and I'm starting to get less and less bullish every day that goes on. First of all, the purple predictor remains under the price action. It is more bullish than the price action, so that keeps me on the bull side. But we failed to make a new high a week ago. The market was moving up sharply, the purple predictor was looking good, but the price couldn't surmount the highs we made about 3 weeks ago. So that's not particularly impressive. If it's truly a bull market, we should be making new highs right about now, and we're not. So I'm still on the sidelines. I don't have a position, don't want to have a position. All right, fully paid up members, we'll see you in a second, but freebies, thanks very much for being here. Hey, freebies for Wall Street Winners. Really appreciate having you here and love to have you participate in the Wall Street Winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature. That's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.